Many traders believe they lose control only at the moment they click buy or sell, but the real loss of control starts much earlier. It begins with small emotional triggers that activate old patterns before you even notice what's happening. A single comment from someone at home, a missed entry, a sudden spike on the chart, even checking your P&L too soon. These micro events can silently shift your state and shape the decisions you make minutes later. These triggers matter because trading is not just about reading structure. It's about reading yourself. When a trigger hits, your mind narrows, your patience drops, and your perception of opportunity changes. You start seeing urgency where there is none, or danger where there's only normal volatility. Without awareness, these reactions feel automatic, and they push you into trades that do not match your plan. Most traders think their mistakes come from lack of discipline, but in reality, they come from unrecognized triggers that speed up the decision process. A small frustration turns into a rushed entry. A brief moment of excitement becomes oversized risk. A tiny fear becomes hesitation that costs you the setup. The chain reaction is fast, and once it starts, it is very hard to interrupt without a clear map of your triggers. This is why trigger awareness mapping becomes a powerful tool. Studies on emotional pattern recognition from the University of Chicago show that when individuals identify the events that precede emotional spikes, the brain builds a predictive model. This model reduces reactivity and increases self-control in high-pressure environments, including trading. When you can see your triggers before they activate, you stop reacting and start choosing. Welcome back to the ComLucro channel. This session is part of our psychology mindset workout for traders. And today, you will build your personal trigger map. By the end of this workout, you will know exactly which events destabilize your mindset, how they influence your execution, and how to intercept them before they take over your trading decisions. Awareness is the first layer of control, and today we will train that skill together. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the ComLucro community to support the channel and keep improving as a trader. Now that you understand why recognizing your triggers is essential, let us walk through how trigger awareness mapping actually works. The purpose of this method is to reveal the specific events that shift your emotional state before you notice it happening. Most traders believe they react only to price movement. But the truth is that reactions begin much earlier. They begin when a trader activates a mental pattern that quietly alters your perception of structure, risk, and timing. The first step is identifying the moment before the reaction. When something changes in your focus, your breathing, or your urgency, pause and ask what happened just seconds earlier. Was it a sudden candle spike, a news alert, a message on your phone, a missed setup? These tiny events create internal tension that feels unrelated to trading, yet they directly influence how aggressively or defensively you engage with the market. The second step is labeling the trigger. Give that event a clear name so your brain can recognize it later. For example, missed entry trigger, sudden volatility trigger, P&L check trigger, unexpected distraction trigger. When you label a trigger, you turn it from an unconscious impulse into a visible pattern. And once you can see the pattern, it loses its ability to control your decisions without permission. The third step is mapping the emotional response that follows the trigger. Ask yourself what the event causes inside you. Does a missed setup create frustration? Does a fast candle create fear of missing out? Does a loss create urgency to recover? Does a win create excitement that leads to oversized risk? Understanding this emotional link is the key. The trigger starts the reaction, but the emotion drives the behavior that follows. The fourth step is matching the trigger to the behavior it produces. For example, a volatility trigger may push you into rushed entries. A frustration trigger may lead to revenge setups. A distraction trigger may cause hesitation. A P&L trigger may lead to cutting trades too early. When you understand the chain from trigger to emotion to action, you gain the power to interrupt it before it becomes a trading mistake. The final step is creating a corrective response. Once you recognize the trigger, apply a simple action that resets your state. It could be a deep breath, a 5-second pause, a quick note in your journal, or even stepping back for a moment. The goal is not to eliminate triggers. The goal is to avoid letting them run your trading decisions. With repetition, this mapping becomes instinctive, allowing you to stay steady even when the market or your environment becomes chaotic. Now let us look at how trigger awareness mapping appears in real trading situations. Imagine beginning your session after missing an entry by a few seconds. You sit at the desk, and before you even load the higher time frame chart, a small frustration is already present. Nothing intense, just a quick internal sting. Without mapping this trigger, that frustration slips beneath your awareness and begins shaping your next decisions. With the trigger mapped, you recognize what happened, you see the emotional shift, and you reset before that frustration turns into a forced trade. Another common scenario is a sudden candle spike that does not require action from your strategy. Even though there is no setup, the noise alone hits your nervous system. Your attention tightens and you feel a flash of urgency. Without understanding the volatility trigger, that moment pulls you into reactive thinking. When you pause for 2 seconds and name the trigger, the urgency loses its authority. You regain the ability to read structure rather than react to speed. Trigger mapping also becomes essential after small consecutive losses. Each loss acts as a micro-trigger, stacking frustration even if you tell yourself you are fine. Eventually, your emotional level rises without warning. You start searching for entries that are not actually there. You feel the need to recover. When your trigger map highlights these accumulation points, you see clearly that the pressure did not come from the market. It came from repeated triggers that compounded your emotional activation. This awareness prevents the slide into revenge trading. Positive triggers can distort your execution as well. After a big win or a strong winning streak, confidence rises and acts as its own activation trigger. You feel faster, sharper, and more willing to take risk. Without recognizing this confidence trigger, that elevated state pushes you into oversized positions or trades outside your rules. When you name the trigger, you see that it is not clarity you're feeling. It is activation. That distinction brings you back to balanced execution. As you begin to track your triggers in real time, you start to see how each one shapes the way you interpret the market. Instead of being pulled into invisible reactions, you gain the ability to spot the trigger, name it, and interrupt the pattern before it becomes a mistake. The more consistently you apply this mapping process, the more stable, patient, and intentional your trading decisions become. Now here is how you can start practicing trigger awareness mapping today. At the beginning of your session, take a brief moment to observe your internal baseline. Notice whether you feel neutral, slightly tense, eager to trade, or distracted. Pay attention to your breathing, your posture, and the speed of your thoughts. This quick scan creates a reference point, making it easier to notice when a trigger shifts your state later in the session. As the session unfolds, identify each moment where your emotions change suddenly. It might happen after a candle moves too fast, after you miss an entry, after a loss, or even when you check your P&L before you should. Each time you sense a shift, pause and ask what caused it. Name the trigger, label the emotion that followed, and recognize how it tried to pull your behavior in a new direction. These small interruptions prevent a trigger from becoming an impulsive decision. Your exercise for this week is simple. Map at least 3 triggers per session. 1 trigger at the beginning as you establish your baseline, and 2 more whenever your emotional state changes, no matter how small the shift feels. With repetition, you start seeing patterns. You begin noticing which triggers appear often, which ones escalate fastest, and which ones lead to your best and worst behaviors. As you continue this practice, you will start to see how these triggers shape not only your execution, but your interpretation of the chart. Movements that once felt urgent lose their grip. Frustrations that used to push you into the market soften before they become action. And your entire session becomes more stable because you understand what is happening inside you with clarity and intention. You will not only trade with better decisions, you will trade with a calmer and more controlled mind. Now, as we wrap up, I want you to remember where this practice fits inside your development as a trader. This session is part of our Psychology Mindset Workout for Traders, a series where each workout strengthens a different pillar of your emotional performance. Keep mapping your triggers, keep noticing the moments that shift your state, and you will gradually reduce the emotional reactions that once controlled your decisions. With time, you build awareness. With awareness, you build control. And with control, you build consistency. Please also remember that our mission here on the ComLucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology, because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the ComLucro Trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.